Let's take a look at some charts on Legacy today, Thursday, for Brave New Coin. So I always like to compare crypto to Legacy. Is it risk on? Is it risk off? What is crypto doing relative to various metrics that are representative of other stuff going on in the world at the time? So the VIX in the line here is a representation of volatility on US legacy markets, thought of mainly as a fear index. If VIX is rising, crypto historically has been bearish. If it's falling, crypto has been bullish. And a VIX below 10 is typically incredibly bullish. Since March 2020, since Corona, we had a huge spike in the VIX, historic highs in the VIX, and that has slowly been creeping its way down. Sub 20, this week it's sub 17 for the first time since pre-March 2020. So everything looks bullish on that front. Gold on the bottom here, this is a 30-week rolling correlation with gold versus BTC. We are at really the peak negative historically. It's never been this negatively correlated, which means if BTC is going up, gold's going down, or if gold's going up, BTC is going down. And it looks to be heavily in inverse lockstep with one another. So this could indicate a outflow from gold into crypto, or just a complete divorce from the narratives, again pointing to risk on type stuff. Dixie was extremely negative and has been, that correlation has been waning, which is good because Dixie's actually been looking pretty bullish. And we wouldn't want to see, if you're bullish crypto, you don't want to see a bullish Dixie if they're negatively correlated. Not that correlations hold or are super meaningful over a long period of time. Really, it's in those 30, 60, 90 week periods that's probably the most relevant. So to see the correlation come off is a good thing if you're bullish. Really the most concerning correlations that I keep talking about are SPX and NDX, NASDAQ and S&P 500, because these correlations are extremely positive. They've been extremely positive for quite some time, which represents crypto's risk-on nature and not really being separated from the legacy casino. So it's great when it's going up, but when it's going down like it did in March, it's going to be swift, brutal, unrelenting, that sort of thing. So ideally, we have no correlation with S&P and NDX, but if they're bullish, great. But people aren't going to like it when we're bearish there. So I'll look at all these individually. Dixie, on the daily, I'd been saying it looks great. It's above the 200, or at least it was. It's above the cloud. It still looks fine trend-wise. It's basically the first time it's been above bullish trend metrics since mid-2020. And ideally, if this is bearish, what you want to see is a breakdown below the cloud. This is potentially setting up for a massive inverted head and shoulders through Q2 that would break up probably into Q3. So just something to think about, as a possibility of what might happen here going forward. The worst thing we can see if we're bullish crypto is Dixie just screaming higher, which doesn't really make too much sense relative to all the money printing we're doing in the US. So I think that's the most remote possibility. It makes sense that Dixie fundamentally does a bunch of nothing here, trend-wise, and anything below 88, any new lows here should be incredibly bullish for crypto collectively. Gold on the weekly chart has really sold off, has continued to sell off. It initiated the first part of this edge-to-edge trade. So how this works is when price goes inside of the cloud, you expect price to reach the other edge of the cloud. Another part of this is having a bearish TK cross. You can see how messy this setup can get, and it will eventually play out over here. This was 2011 through 2013. So this may creep back up to the yearly pivot, back up to the top of the cloud, and then you'll get your bearish TK cross, more likely than not at that point in time. And then it initiates a better entry point for the edge to edge. This isn't necessarily a trade I'm taking personally on gold. It's just a way to illustrate how to trade this, or ways to trade this from a cloud perspective. So it still looks neutral bearish to me. It looks like it has a date with destiny, at the very least the 16, maybe lower to this S1 yearly pivot and the weekly 200-week EMA. SPX, so it gapped up this week, and it looks like it wants to tap the R1 yearly pivot. looks incredibly overbought to me, continues to look overbought. Painting bearish divergences, arguably, over and over and over. As this goes higher on equivalent momentum or less momentum, that qualifies as a bearish divergence, suggesting waning bullish momentum. TK lines are very spread apart. It's very far away from the 200-week moving average, which isn't necessarily an immediate reversal sign. It just says historically it is far from where it likes to be from the mean perspective. So if this stays bullish, we're bullish crypto, right? But the moment this is the NDX, the moment this stuff pulls back, it's going to be harsh. Here's a more clear evidence for bearish divergence. Just every high is just less and less momentum here. And NDX turned up and it's looking like it's going to print another all-time high on the close soon. It does have a bearish, it has a TK disequilibrium, which is bearish and suggests pullback potential, as does distance from the 200. But this looks like it's ready for the R1 yearly pivot, just like SPX does. Doesn't make a lot of sense. Makes me nervous. I don't want to buy here, but it kind of is what it is if we're printing a bunch of money. Looking at the meme stocks, because they have interesting effects for crypto markets. So GME doesn't look bullish. It looks like it's just being faded at every high. Looks like it's ready to continue to sell off, just slow death bleed over time. AMC, very similar, just, this is bullish. This is bearish. That's how I would read that. It's the same reason, ascending triangle is bullish. If you're sort of knocking on some horizontal over and over and over again, eventually you break through it. So it doesn't look too bullish for those two. BBBY actually looks better to me. It looks like it has a horizontal up here that it's crossing to the upside. It was another part of the meme stock madness. So even these are sort of decoupling from each other. Now, if we look at MSTR, Tesla, and Square, all of these had some sort of inverted head and shoulders. So the setup was here with the inverted head and shoulders, then it failed, right? So you expect no further bullish continuation at the very least. Overall, this is still consolidating. It doesn't look like anything to me at this point. Tesla actually looks fine. It looks like it had this head and shoulders thing, and it's at the neckline now. So that would be considered a retest of resistance confirming support, basically. A throwback is what it's called. So that looks good. I mean, this is the kind of thing you're looking for a bullish entry confirmation. And then Square kind of exploded way past that potential neckline, diagonal resistance, whatever you want to think of it as. Bit of an Adam and Eve here that it sort of morphed into. So Square looks the best out of all these to me. And the reason these are important is because of their Bitcoin treasuries. And if we look at ecoinometrics, he does some great data on looking at the Bitcoin treasuries sort of as an index versus NASDAQ, SPX. And there's a clear difference here, obviously, even between BTC and these stocks. So there's definitely an appetite for legacy players to get into this stuff, which is why the Coinbase listing should be insanely bullish for crypto, for everybody involved. I don't think there's anybody who's expecting that to turn bearish in any sort of way, especially with the numbers they recently put out. And then if you look at these individually, when they purchase the BTC, MSTR is just basically buying whenever they can, it looks like. Hasn't really affected price at this point, one way or another. If we look at GBTC, another legacy vehicle for crypto, it looks just like spot, really. There's no big differences. If anything, the ascending triangle looks better on GBTC than spot BTC. ETH still sort of consolidating, meandering walk. Now, both of these have a 5 to 10% discount at any point in time from spot. That's also worth thinking about and considering if you're jumping into this stuff, because if you jump into something like these pink sheets, you're hoping that the discount turns back to parity with spot, and best case scenario, you get some sort of premium again from spot. They talked about this week that they may be converting or trying to convert the GBTC stuff to an ETF. Again, I don't think that's a secret for anybody who became aware of that possibility at this point. So that would also be incredibly bullish for BTC. I mean, that's kind of like the dream of legacy involvement, is a direct ETF. There are ETFs around the world, but nothing in the US just yet. Moving over to CME. CME also, again, not too much difference from spot here. You can see the inverted head and shoulders that broke up, ascending triangle here, maybe even a potential inverted head and shoulders up here, depending on how you want to read that. But even if you think that's all gobbledygook, nevertheless, it looks like this is pointing to higher highs. Again, you can have this horizontal resistance, and looks like 66 to 71 on CME. ETH futures on CME, you don't really see. I think it's too early, not enough data yet. I mean, it just started trading a few weeks ago. And for the most part, it looks like it's in line with spot. Nothing too crazy there. Then lastly, again, just talking about the CME futures rollovers, the last one and the one before that and the one before that were extremely volatile events, even the one before that. I mean, you can look at this chart and just sort of backtest it, but all of it sort of had this like downward effect on price. So that's always worth noting when the next rollover is going to be. It's going to be April 30th at the end of the month. Now, the second thing I take away from this futures expiry chart is that these long-dated contracts have a very specific bias that we pretty much know from the get-go early on. And if we can establish some sort of bias for this March 29th to September 24th contract, then we can solidify most likely the bullishness of this time period. I think thus far it's a little too early to tell. And it appears as though the market may or may not be waiting for something related to the Coinbase IPO at this point, now that it's set in stone as far as the date is concerned for April 14th. So that's something to look for on the legacy realm for sure. Like, comment, share, subscribe. Let me know what you think about legacy stuff in the comments below. If you want me to talk about anything else legacy-wise specific, let me know. Happy trading.